G'day traders, welcome to wrap up of Tuesday the 7th of August. So here on the daily chart you can see we're still going higher, trying to put some pressure on these previous swing highs. These, as we said before, these areas are basically the highest the market's been in the last couple of years. So we're definitely hitting significant areas within this marketplace. On the daily chart at the moment it's kind of hard to pick up exactly what's going on. There might be, you could pick up on maybe some levels, support resistance levels through here, but this is why I suggest really switching over to say a 15-minute chart and getting a little bit more idea of the immediate kind of perspective of the market, or more the intermediate view. So obviously, we trade 5-minute, 1-minute charts, which are great for exact price action and getting exact entry, and then the daily charts is very much an overall perspective, but really linking those together with a medium-term view. And I find 15-minute charts or 60-minute charts are really great for that. I'm always marking key levels, which I do usually get from the 60-minute chart. Like I say, key levels being, it can be a couple of different ways. For me, it's mostly horizontal support and resistance lines, and also vertical support resistance lines through the form of these trend lines here. Or you can look back and go through time and pick up areas. For example, 91, you can see the market's bounced off 91 here, but if you go back in time, bounced off underneath it here. Now you go back through the weeks, you'll see 91 is a significant level in the marketplace, and if you're understanding that it's a key level of the market, whenever the market approaches it, then you're looking for onto your 1-minute chart for formations around those areas, then you're dealing with a high probable area. That's what makes high probable trading. Other thing you could do is use Fibonacci's and things like that on daily charts, or some major major indicators and things like that, and that also marks significant areas. Just looking for anything that you think that the majority of other traders will be looking at, and that's what makes the markets move. And of course, support resistance lines is something that all traders look at, whereas sometimes specific indicators, moving averages or Fibonacci's, they're very popular, but they're not necessarily what everyone uses, but they can still work. So 15-minute chart here, we're definitely on the upside as we're opening up this market here. So this is the open up here, and this is where you can see a lot more of getting a lot more of an idea of what's going on. As we're opening up this market, you can see this trend line. It started all the way back through here, but even when we started to break it, look at how the market keeps on respecting it. So as we're opening up today's action, Tuesday's action, see how we got above it and then we bounced straight off it and then headed up. So that was definitely an indicator that these markets were looking to get up and continue this upward formation. Then now we're getting back towards this trend line. See, we've got underneath it now. We've actually used it as resistance and then pushed down off it. So this trend line keeps on becoming a significant area in this market that traders are obviously respecting and watching. Tuck that over there. Right, so let's have a look at the day. So volume is still quite low. As far as the overall movement, still, we're very restricted. But in saying that, today was a little bit better than Monday, that's for sure. And but still overall, a day that was restricted to, what's that? So about 95 to 403, so about an 8-point range. So to start off with the market, you can almost imagine you draw a line. There's sort of this pre-market action through here like this, and the market actually respected this level quite a few times. So we've pushed up, it's come back, it's tested the area again, it's pushed up higher, and then we're breaking through its highs here. So this area here, as far as understanding whether the market want to go higher or not, quite often the other markets will give a good indicator of what's happening there. The Russell or Nasdaq will quite often lead and break first, and you'll see ES follow. In this particular case, I was watching this is an area I like to trade. I found this area a difficult one, even though it worked. Wasn't one I was particularly interested in, just because, not that I didn't believe the markets could go high, it's just that the ES was leading the markets, meaning they were the one initiating the up move, which doesn't normally happen that way. Normally the Russell and the Nasdaq will lead, but because the ES was initiating the move, it was kind of hard to get a real predictable sense as to what was happening there. But so you can see the market has gone higher. Up around here, this is a real classic sort of reversal pattern, or head and shoulders, or what you'd call a rounded top. So you can see pressure is on the upside, but they're stepping up but lose momentum, and all of a sudden they start stepping down. This classic ending of upward momentum turning into downward momentum there. And as we started breaking underneath this region here, this top region, that was like a real indicator that potentially these markets were heading down. Just have a bit of a closer look on the 1-minute chart. Overall 1, 2, 3, quite limited as far as power points, but even within that, the market, even in these small ranging days, the market still respects support resistance areas and trend lines and things like that. And quite often, A real advantage of slow markets is they tend to abide by the significant levels in the market even more so because there's a lack of volume or lack of volatility in the market. They're not kind of moving around all over the place. They have some time to sort of really um, you know, understand the market and respect those levels that have previously been there. And that's what I'm finding the last few days. There's not a lot of movement, but it just to the tick almost. It's respecting certain support and resistance areas, uh, and that was certainly the case with this particular market. We pushed up through a couple of power points here, came back, bounced off a significant support level here. 97 again was sort of a level that the market kept on respecting. We've gone up higher. Even this movement up here, it's very limited as into what's happening there. But especially if you're looking at, say, a 5-minute chart, it tends to give you a little bit more of what ideas what's going on. And if you're watching this 1 minute price action at the same time looking over the left there on the 5-minute chart, you can see certainly some momentum starting to form on the downside. Once we start breaking underneath sort of it's this region here, you can see a real significant support area here. Once we get underneath that, chances are the market's going to keep on going. If it's going to stop you out, it's got to actually get back above previous resistance back here. So even though it's a low volume area, you can still put some probability within that area of going down. Eventually it's kept on going, and away it went. As far as back to the 5-minute charts for a second, there's a 5-minute fade here. So this is an area where it says the sell. This was a little bit of a different one. It's an area where it could have found a bit of support and headed back up off the top of basically this area here. So as far as getting a little bit of a push down once it started breaking through here, I thought that was definitely probable. Once it started coming here, another mark started bouncing. This looked like an area where it probably could get a bounce from. Once it started to break down again through this bit of a swing low here, well, that's when the market really said, okay, it's they're switching the momentum and they're going to have a look at pushing down. And then as far as heading down, actually to the tick, and I talk about significant support and resistance on 1396 is an area. If you look back to the charts, we spoke about this in the trading room. Once it started pushing down, it looks like it might go and try and test, say, the next support and resistance area, which was 1396. So that's what I mean by these. Even though they're quiet markets, they tend to be respecting these levels quite well. But that's a wrap up for Tuesday. We'll speak to you guys on Wednesday.